Hello, good morning, and welcome to Life Series with Tide. Today we'll be rounding up our series on personal finance. Last week we spoke about how to manage your salaries, where we spoke about the recurrent expenditures, and we spoke about, you know, settling the basics. Today we'll be speaking about loans. Yes, loans. Is it a good thing to get loan? Is it a bad thing to have loans? Why should I get loans? How do I get loans? Where do I get loans? And how do I manage it? Today, we'll speak about that. Now, let us start by saying, what is a loan? A loan is the amount of money you borrow from the bank with the aim of paying back over a period of time. Now, some people borrow to settle recurrent expenditure. I don't think that is right. Some people borrow to sort out capital assets. I think that is very lovely. So I will advise you, if you want to pay for your school, if you have a very lovely school you want to go to, and you can afford it at the moment, but you want to go there, it will help you pivot your career, please go ahead. If you want to build a house, get a mortgage in abroad, or build a house in Nigeria, and you need a loan, yes, please collect the loan. Number three, if you want to get things like assets that are depreciating, but you need it to improve efficiency, like getting a brand new car where you don't have to, uh, go to the mechanic often, then please do get a loan. But one thing you need to look out for, the first thing is the interest rates. Ensure that your interest rates are not killing. Ensure that your interest rates are close to the level of inflation, right? So level of inflation, for instance, in Canada is 5, and interest rate is between 4.5 and 5. In that space, it's safe. That is high, but still safe. In Nigeria, if you get interest rate anything below 18%, that looks interesting. If you then work with a bank and can get one-digit interest rate, that even makes it fantastic. Now, there are things you need to look out for when you are getting a loan. The first thing is that you need to borrow the money you need, not what you want, the money you need. I need 50 million to start up this business. Don't borrow 70 million, borrow 15 million, right? Borrow 15 million, not 70 million, because that extra 2 million that you want to use to pad, you will pay it over and over, and you will get stuck eventually. Number two is that you need to always understand the terms and conditions of your loan. Is it a floating rate or a fixed rate? What does the floating rate means? It means that as if the forces of demand and supply affect the economy, and interest rates and inflation goes up and down, whatever the CBN, central bank, does affects your interest rates. If it is fixed, it means that even if it is fixed, even if there's changes with the central bank, your interest is fixed, and it allows you to do things the way you want it. Fixed, fixed, fixed. You can plan on your repayments. The second thing you need to understand is that you need to consider the long-term impact of your loans. Don't just say I have loans and I'll just take it because I need a loan. Look at it. Will it affect my salary? Will I be able to meet my recurrent expenditure without borrowing once they start deducting from the salaries? Number three is that you need to look for the best deals. Don't say I'm loyal to this person. He works in bank ABC. That I must do it. He's my friend. No, no party for jungle. In this one, it's you and yourself. So you get the best deals. Get the best deals in any bank, right? And number four is that you need to make your number five, sorry, you need to make your payments on time. Ensure that you pay on time. Don't default on your payments. If you're abroad, ensure that your credit card is healthy. If you're in Nigeria, ensure you pay on time. That will be it from us on Live Series with Tide this week. Looking forward to seeing you again next week. Do have a lovely, lovely week ahead.